Good evening, this is Rodney with the Triton Wave Market Outlook for Monday, September 12th, 2016. And this is brought to you by Triton Wave Consulting. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. To begin with, I would like to start off with the ES on the daily. Friday was quite the thrilling day, down over 50 handles, and there wasn't much on the daily to indicate it. All the waves were, the two main waves were up on number 1, number 2 they were above 0, number 3 they were down. So number 3 and 4 have been indicating sideways to with an upward bias on the first and second wave, but nothing to indicate that this would happen right in here. So let's break it down to smaller time frames to see what we can see. Okay, so here we find on the smaller time frame charts, well, smaller than a day, the 144 minute. The wave number 1 and 2 pretty much track what's been going on for the last year, 9 months. Well, even wave number, the second set of waves here goes all the way back to 10 of 215, and you can see generally up here on the 144, generally down if you're a long-term investor, generally up, generally sideways to down, and then back up when they all go back up above 0 here, and staying up here. But look at what's happening on wave number 1, where it went up. This, I believe this was after Brexit back in July, and it just took off. Wave number 1 took off here, and everything was above 0. All these not exponential, moving averages were above each other, stacked above each other, from the 21 to the 55 to the major and the minor Triton wave, until you get to about back in August 3rd, it starts going below. So one wave below 0 doesn't make the day, but when it's coupled with the second set of waves here, I'll make this a little bit bigger so you can see it. When one goes down, then the next goes down, and the next one goes down. Even though this is still creeping up, and the first wave is below 0, the second wave is starting to creep down, you know that this is a red flag to me right here. And I was looking for something on the downside. I wasn't looking for 50 points at once, but I was looking for something on the downside. So let's break this down even further. Okay, so on the left-hand chart here, I scooted it over a little bit, but you can see it's still the 144. And since this area right from about 9/1, so this is like right before Labor Day, when everybody's coming back from the Hamptons, and vacation time is over, I'm looking for something. Even though this is creeping up, I'm looking for something on the downside. So then so from this point on right here, and let's mark this right in here. Let me see, right here when it starts going below, and when the pink one starts going below. So we're going to mark it here, and on the 377 it starts happening right around here when the market. Okay, so this is very short term. Whoops, hang on. Okay, so I marked this off on the 144. Now let's bring in the 377, and I marked it off the same place on the 77, and here we are. So I'm looking at the 144 starting to give me a sign that it could be down. This is, let me tell you, this is also verified. In fact, let me show you. I think you can see this. I think this isn't in the frame that I'm showing, but this mark right here from August 11th to the present, except for that one little hiccup right here on August 23rd, which was like a 20-minute thing. This is a 21-minute tick chart of the New York Stock Exchange, and this is applying the waves to the tick chart. So you can see that it's been under under zero, and on the bottom two waves. Of course, the shorter term ones go up and below zero, but the shorter term came down on 9/8. This one came down on 9/8. So these are all on Thursday, and this has been down the whole time. So this is really this is really when I began to look at this stuff. On this chart over here, we can see this is actually a picture of the long 5-minute wave of the VIX, which went above on 9/8. So that would be on Thursday. So these were all indications that something was about to happen big time. Again, I didn't know it was going to be 50 points, but I thought it was going to be 20 or 30. Okay, so we're back in the 377. So just in terms of the 377, because the 144 is now below zero, and on the first wave and the second wave is trending below on the shorter one and the medium one, then we can start playing this to the downside of every one of these short-term plays. So it goes down. This is like 2173. This has happened on 9/1. Very short term. Every play is to the downside. 21. I'm sorry. Back up here. 2171 short term, and this just turns up until 2153. You wait till it goes back up again. That went sideways. That was a scratch play. Okay, this one was good for from 8 to, this is good for 11 points. Wait till it goes up, comes back down again. This is worth about 5 points. So you want to go with the trend of the market. Now, what happened on this day right here? This was like the beginning. This is 3:30 in the morning on the 9th, which was Friday morning, when it started getting obliterated. Let me just open that up a little bit. And this actually, this doesn't count. Between 78 and 70 was the turnover from one contract to the next one. So it actually starts the day right here. But when this major wave goes below zero right here on the 377, you are about 1 or 2 points below where it closed at on Thursday. So this is the opening on Friday. So if you had just played this at basically 4:30 in the morning, 4 o'clock, if you got my text, well, if you were a client and got my text, then look at this. What I wanted to point out was, without even looking at these waves, because these short-term ones are basically, they're useless when the market's in a rage mode. So you have to look at the longer-term ones. But just to focus on what this looks like right here, as long as this stays below the 55, and it's been doing so almost all day long, and including opening on Sunday at 5 p.m. Central Time, and right now it is very early. It's 1:15 in the morning, and we're down 11. We have been down 16. It already hit 2100. 2100.25. So let's get this back up here. So this is what I'm looking for, and I will let you know as soon as this happens, that on even the shorter term ones, at least when this now on these very short ones, on a big down day on Friday, I'm not going to pay attention to these. So I am waiting for this to go above zero. The second line, when this is above zero, and this does its thing of going above zero, below zero, and above zero again, which could happen on a 377 tick, could happen very rapidly early in the morning. As long as this is above zero, when this catches on, then this could easily go from 2105 up to 2127 or even 2154. So we'll wait and see. If you're on the list, then you'll be notified immediately. One other thing before we go to the bonds, one other thing I wanted to show you on the 144 was that tonight, when it hit 2,000, almost 2,000 even, it hit the major Triton wave, this blue one going across, which has played interference on every major move going all the way back to June 2015, and you can see how it's held the line. Went below it, came back up it, but it's bounced, it bounced. When it came back here, it hesitated before it pushed through, used that as support, came through support, messed around there, and then came down. So it's always been there. So this line may be very important on Monday morning because it did get hit. So we might expect a little bounce, but again, I'm not playing the bounce until we get some kind of indication on the 377, at least on the shorter term, and hopefully on the wave number 2. Okay, turning our attention to the bonds, the 30-year bonds on a daily basis. Just to show you here on my last video, I told you what I was looking for that hadn't happened since January 11th of 2016, right in here, I was looking for the 21, I believe that's the 21, that's the 21 EMA going below the 55, or else it was generally in an uptrend. And I told you I was looking for a cross here, and I thought it was going to happen really shortly. And indeed it did come down. When it came down here, I was looking for the cross to happen, and I suggested in the last video I did that if it comes back, that it looked like on the short-term graph on the 55, I believe it was the 55. Let's just look back here. On the 55, I think you can see this on the graph, it had crossed to the upside. So I was looking for this to catch a bid, and look at this wave, this perfect 55 tick chart took the wave all the way up to 71.15, which was right into this intersection of where the 21 and the 55 was. And from there, I was waiting to see whether it would push through or not, or whether the wave would continue. By that time, the 21 and the 55 had crossed, so I was actually looking for a downside. And then if we bring in the 55 right here, I can see here, let me get this. Actually, let me bring in, not the 144, let me bring in the 377 first so we can look at that. Okay, so this is where it came back up. Now this is a 377, and this is the 171. This is the move that it made that I was looking for right here. It capped off at the major Triton wave, and this is what I was looking for. And I had no idea it was going to come down 2.5 points, but I suggested in the last video that it would zigzag down over the course of a couple months to, let me see where I had that, hang on. That it was going to zigzag, once it crossed there, it was going to zigzag down to possibly 160.28. So you can see that it's been following that line all the way up. So right now, it looks like that's what it wants to do over a longer period. Of course, this is going to be 160, probably 162 by the time it happens. But what I'm really looking at is for a shorter term play, and realizing that I am a short-term trader, and I think many of you are. So when it came up to here, this was definitely a short. Now, was I expecting 2 points on Friday? No. But this is the 133, and you can see the shortest wave I have right here crossed over to, it was kind of like beginning of a short-term buy signal, and I wasn't going to touch it because of all the huge move that it made on Friday. But here we are at this time in price right here at 417 on Friday. It started to give a buy signal. Now it was down about 10 ticks at the opening on Sunday, but managed to come back up, and it looks like it's right now pretty close to the high of the day. Let me see. 167.01 and the high is 167.02. This is a very good shot of hitting 168.15. So that's about a point, slightly less or slightly more than a point and a half from here. This should happen pretty quickly. And that's what I have. So if there's any change in that, I will definitely let you know. If the short-term indicator changes, or I get something from the 55 that just doesn't look right, then we'll take whatever we have and get out, and I'll let you know. I'll let you know what the next move is. Right now, let me see, on this chart it looks like 167.29 on the whoops, let me get rid of this here. On the 377, it looks a little bit more. Actually, I like the 377 more. So that's what I have for right now. Good luck trading and have a great weekend. Again, my name is Rodney, and I am with Triton Wave Consulting. The Triton Waves are something I developed over a 15-year period, and I specialize in bonds and ES for private clients. If you want a consultation, or you want to join my member group, shoot me an email at rodney@tritonwaveguy.com. Have a wonderful evening, and see you at the next update.